Morning, Steve Reed in Chicago with the morning grain comments. Well, it's Wednesday and we'll be getting some weekly ethanol data today that should show a continued slight increase in production and maybe a small drawdown in stocks. Production is nowhere near where we were before the virus, and USDA is expected to drop their estimate of ethanol production, which could add to the U.S. carryout. As far as the individual market, soybeans are up a little bit. We've been up the last couple of days. The fact that China is buying U.S. soybeans. We don't know how much the soybeans they're going to buy, but we're at the midpoint of a broad range in beans between $8 and $9. The more they buy, the more we might move a little bit higher. If they are slow in buying, and if the U.S. crop is good this year, we might test the lower end of the trading range. In meal, South American values are cheaper than U.S., and domestic demand for meal continues to be slow. And so the bright spot in the complex is vegetable oil. Asian vegetable oil prices are higher. U.S. soybean oil futures traded over 98 cents a pound, and it looks like the demand is strong for vegetable oil globally, and it looks like the USDA might be underestimating U.S. soybean oil exports. As far as the corn is concerned, we're still in this $3.40 trading range. There's just too much supply, and as we mentioned, demand is coming down, so carryouts are going up. As far as U.S. weather is concerned, it looks favorable for the next week or so. Start out with warmer temps, and then some scattered rains move into the Midwest. A tropical system is going to bring some heavy rains into the Delta and eastern Midwest, and then behind it, June 9th, looks like cooler temperatures for much of the Midwest. So it looks like a mostly favorable outlook for weather, and the USDA did raise this week's corn crop ratings. Best corn is in the western Corn Belt. As far as the wheat market is concerned, this morning's Black Sea weather maps are a little drier than they were yesterday, which might be offering some support. The southern U.S. plains continues to be dry, but we're getting close to harvest, so the impact may not be that severe on the crop. We also noted that yesterday Egypt bought Ukraine wheat, and the Russian offers were quite a bit higher priced, and there was no Eastern Europe offers. And so that's raising some talk that the Russian supply might be getting a little tight before their harvest. And Russian domestic wheat price continued to be very strong as people try to bid for that wheat domestically versus the export market. Still, wheat probably near resistance given the fact that world stocks are going to be record high this year, and the fact that Western Europe is finally getting some rains. Outside markets, stocks are higher on hope that we will get the economy start going again slowly as we slowly reopen. We're still watching all the unrest and protests and the impact that might have on demand, especially on the energy side. And we're watching OPEC pretty closely to see if they continue their current production curbs, which has been supportive for the crude oil. U.S. dollar continues to sink lower. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.